Start video here. Audience. Where's Dad? There he is. All right. So every year, billions of dollars are made and lost in the securities markets, the stock market and the bond market, others precious metals, things like that, commodities. And earnings reports provide opportunities to learn more about the securities of companies that are publicly traded in the stock market. This is important because more information from these earnings reports will reduce the risk of buying the securities because they provide a more clear picture of the company's current performance as well as the expected future performance of the company. Tonight we'll examine how earnings reports must include the most recently updated financial statements from the previous quarter and how forward guidance provides a more clear picture of what the company's leadership expects in the upcoming quarter, and what happens when a company exceeds the estimates for the quarter. The price of the security is generally accretive in nature. It generally trends upwards following a positive earnings report. So let's begin with an examination of what earnings reports entail. In the book titled Principles of Accounting by Franklin, Graybill, and Cooper, published in 2024, earnings reports filed with the Securities and Exchange Commission are required to include the most recently updated financial statements from the previous quarter, the balance sheet, income statement, and cash flows, and statement of owner's equity. The balance sheets will provide the most up-to-date depiction of the assets and liabilities that a company has. The assets are essentially positive, the liabilities are things that the company owes. The income statement will provide the most up-to-date depiction of revenues and expenses, where they have money coming in and what the money going out. The statement of cash flows and owner's equity provide the most up-to-date depiction of where cash is going for the company, where their cash is flowing in and where cash is flowing out to. So having examined the financial statements, let us now examine forward-looking guidance contained in these earnings reports. Forward-looking guidance is very important to the price of securities because the markets, stock markets, commodities markets, etc., are constantly forward-looking. Every investor is trying to figure out what's going to happen next, what's happening in the future. And so that expectation of future guidance or forward guidance is affects the price of securities heavily. According to Security Analysis by Dodd and Graham, published in 2008, forward guidance provides a more clear picture of what the company's leadership expects in the upcoming quarter. The revenue is referred to as the top line, and earnings per share is the bottom line. Revenue is what we begin with, and earnings per share is what we end with. So you have $100 million coming in, and you're showing $10 in earnings per share. That's what investors look at to see how efficient a company is operating. Companies that beat analyst estimates of what the top line and bottom line is going to be for the quarter tend to experience positive price action following the release of this information. And it generally trends upward for the rest of the quarter until the next earnings report comes out. So generally the best thing to look for is a company that beats estimates for revenues and earnings per share and then gives positive forward guidance. And that would indicate, that's a strong indication that the price will go up for the ensuing quarter. Now that we're aware of the basics of earnings reports, let's discuss the impact of the price on the security. According to the Trader's Handbook by Moglen, Schmidt, Haber, and Ray, published in 2025, When a company exceeds estimates for the quarter, the price of the security is generally accretive in nature. When a company exceeds estimates for revenues, investors see demand for the company's products going up. When a company also exceeds estimates for earnings per share, investors view the company as being more efficient. They're making more dollars per share than analysts expected them to. When a company raises forward guidance, this signals investors that the future outlook of the company is better than expected. So that would indicate that the security is currently underpriced and is going to do better in the future. Now we have a better picture of the effect of earnings reports on security valuations. We'll now conclude with the following. Earnings reports provide opportunities to learn more about the securities of companies that are publicly traded in the stock market. This evening we examined what earnings reports entail, how forward guidance provides a more clear picture of what the company's leadership expects in the upcoming quarter, and when a company exceeds estimates, the price of the security is generally positive in nature. More information reduces the risk of buying securities because more information provides a clear picture of the company's performance now and into the future. So that's how earnings reports can benefit investors when it comes to buying securities, because it provides a clear picture, or a more clear picture, of the previous quarter and what's going to happen in the next quarter. And more information reduces the risk. So that's my speech.